All right. Welcome back, everybody, to another deep dive into Aussie real estate riches.
Yeah, it's good to be back.
We've been getting into all the details of the Australian property market over these last couple of deep dives,
Yeah,
but we've been pretty high level so far.
yeah, we have.
And I know a lot of you are probably thinking,
Mm,
okay, you've told me about the market,
yeah.
but what can I actually buy?
Yeah, that's the big question, isn't it?
Like, what are my options here?
Mm-hmm.
So that's what we're going to get into today.
That's right.
The different types of properties you can actually get your hands on.
Yep. So it's kind of like
Order.
choosing your adventure
Exactly. Choosing your adventure, but
with real estate.
with bricks and mortar.
Yeah, exactly, with actual properties.
Not just theory, right?
Yeah, and just like choosing your character class in a game,
Okay.
each property type comes with its own set of advantages and risks.
Risks and rewards.
Yeah.
Okay, so let's start with something I think most people are pretty familiar with,
Mm.
residential property.
Your bread and butter.
Yeah, like if you think real estate investing, this is probably what comes to mind.
Yeah, houses, apartments, townhouses.
The classic stuff.
The stuff that most people understand, yeah.
So what makes these a good starting point, do you think?
Well, in Australia, residential properties are often seen as a bit lower risk, particularly those in high-demand areas.
Okay, so location matters.
Always location, location. They're good.
Why is that lower risk?
Well, a few reasons.
Okay.
You got strong tenant protections in Australia.
Okay. Yeah, I heard about that.
So these laws help ensure a stable rental income by basically setting out clear expectations for both landlords and tenants.
So it protects both sides.
Exactly. It's a framework for everyone to operate within.
Okay.
And then second, you have tax laws that are pretty favorable for residential property investors.
Okay.
There are deductions and incentives available that can help sweeten the deal financially.
So the government's kind of encouraging investment in this way.
In a way, yeah, they see the value in a healthy rental market.
Makes sense.
And then finally,
Big one.
people always need a place to live.
It's true.
It's a basic need,
You can't get around it.
especially in growing Australian cities where people are moving in. You have that consistent demand.
So you can rely on that income.
Yeah, it creates a pretty reliable rental income stream.
Okay, so it sounds like with residential, you've got these legal protections,
Mm-hmm.
you've got these tax benefits,
Yep.
and you've got this like fundamental human need that's driving demand.
Right.
So it's pretty solid if you're just dipping your toes in the water.
Yeah, a good place to start.
But what if you're ready to level up a little bit,
Mhm.
take on a little more risk
Okay, I like where this is going.
for a little more potential reward?
Yeah, so that's where we start looking at commercial properties.
Okay, so what falls under that?
This is where you're getting into office buildings, retail spaces, even industrial properties.
Okay, so the places where businesses operate.
Exactly. These properties often have the potential for higher yields compared to residential.
Okay, hold on. You got to explain yields to me again?
Sure.
Because I know it's important, but I always need a refresher.
Yeah, absolutely.
What is it again?
So yields basically your rate of return on your investment.
Okay.
You calculate it by dividing the annual rental income you're getting by the property's value.
Okay.
So say you buy a property for $500,000 and it's generating $50,000 in annual rental income. That gives you a 10% yield.
Got it.
And because commercial properties often command higher rents.
Yeah, because businesses, they
Exactly.
got more money to throw around than your average renter.
They do.
So the yields can be higher.
Exactly.
Okay, I'm with you.
But as you said, higher potential reward often means higher risk.
That's usually how it goes.
And so what makes commercial properties riskier in Australia particularly?
Yeah. What are we looking at here?
Well, you got to remember commercial properties are way more sensitive to economic cycles.
That makes sense.
If the economy takes a downturn, businesses might downsize or close up shop.
And then you're stuck with an empty building.
Exactly. And no rental income. And in Australia specifically, we've seen some trends that can add to the risk.
Like what?
Well, think about the rise of e-commerce.
Yeah, everyone's buying everything online these days.
Exactly. And that's had a huge impact on brick and mortar retail.
Yeah, poor shopping centers.
So if you're investing in something like that, you have to be very aware of these trends.
It's not as simple as just buying a building anymore.
No, you got to look at the bigger picture.
You got to be a mini economist almost.
A little bit, yeah. You got to analyze those market forces.
Okay, you mentioned industrial properties before.
Oh, yeah.
Where do those fit in?
Industrial properties are interesting
Okay.
because they're often overlooked,
Really?
but they can be a gold mine.
Okay.
Think warehouses, distribution centers, even self-storage facilities.
Okay.
Not as glamorous as a fancy office tower,
No.
but they're essential.
Yeah, everything we buy has to go through a warehouse somewhere.
Exactly. And with the growth of e-commerce and logistics in Australia, the demand for these kinds of properties is only going up.
Okay, so less risky than retail because people are still ordering stuff online.
They are indeed.
And then there's the big one,
Oh, yeah.
the ultimate high-stakes game,
The big kahuna.
land development.
Now you're talking.
This is where you're not just buying a property, but creating it.
Exactly.
So what does that actually look like?
So land development's all about finding an area with growth potential,
Okay.
buying up a plot of land, and then either subdividing it for residential lots or developing it for commercial or industrial use.
Okay, so you're betting on the future, basically.
Big time. Imagine buying land on the outskirts of a growing city, holding onto it for a few years, and then selling it off as the city expands.
Churchy.
The profits can be massive,
I can see why that's tempting.
but it's not for the faint of heart.
I bet.
You need a lot of capital expertise and patience.
Yeah, got to navigate all those regulations.
Exactly. Local planning schemes, unexpected delays.
It's a headache.
It can be, but the payoff can be huge.
All right, so let's recap here.
Sure.
We've got residential properties, our steady eddies.
Yeah, low risk, good for beginners,
Then we've got commercial properties, higher potential returns.
tied to the economy.
Got to be mindful of those market shifts.
Exactly.
Then industrial properties are quiet achievers.
Steady as she goes.
And then the big kahuna land development,
So wild.
the high-risk, high-reward gamble.
It's a spectrum.
It really is.
And the big question is, where do you see yourself on that spectrum?
That's a good question for our listeners.
What are your goals? What's your risk tolerance?
It's about finding the right fit.
Yeah, the property type that aligns with your circumstances and your ambitions.
And that's a great place to leave it for today.
I think so.
But before we go,
Sure.
I know some of you are probably listening and thinking this all sounds great, but I don't have a ton of cash lying around.
Yeah.
So is there a way to get started in Australian real estate, even with a limited budget?
That's a great question, and it's one we're going to tackle in our next deep dive.
Oh, perfect.
There are absolutely strategies you can use even if you're not working with a seven-figure sum.
So stay tuned for that, everyone.
Tune in next time.
The adventure continues.
It does.
Until then, happy investing.
Happy investing.
See you later.